Welcome back, folks, to episode 4 of ICT's 2024 mentorship. At the beginning of this video, I would love to wish ICT himself because this is his birthday. Many happy returns of the day, ICT. You are the real wizard. You are providing a lot of value to a lot of people. They are now able to be consistent, profitable just because of your free stuff, your free teaching. We're really grateful to you, we're really so grateful to you. I hope that you will be with us another 100 years. So happy birthday, wizard again. Now guys, in this video, I'm going to explain ICT's episode 4 of 2024 mentorship. Most of the time, he actually give us a lot of advices about how to trade and what should we do. I am not going to explain all of those advices because most of the people doesn't like the advice. But I will make a summarize in the meantime when I will explain the price action over here. So let's go to the video. Before going over there, make sure that you have given me the thumbs up and you have subscribed to my channel if you are new. This is the 15-minute chart and you can see this is the new week opening gap. 4:59 Friday close, 6 p.m. Sunday open. 4:59 p.m. Friday close, 6 p.m. Sunday open. There is a gap. I have just marked that gap and I divided that gap by upper quadrant, that means the 25%, and the 75%. This is the equal, constant encroachment, that means this is the 50%. Okay. Over here, this is the Monday gap. I just marked that Monday new day opening gap and put the constant encroachment, that means the 50% of that new day opening gap. Here I have the Tuesday gap. I marked that Tuesday gap and upper quadrant, lower quadrant, 50%. Yeah, I will talk about that, why I marked upper quadrant, lower quadrant, and why I didn't mark it over there. Here, this is the Wednesday new day opening gap. Every new day opening gap create around 4:59 p.m. New York local time, and the 6 p.m. the same day 6 p.m. New York local time. Okay, there is a gap, 1 hour gap, and in that gap, if there is a gap, you have to mark that as a new day opening gap, and this is actually your new week opening gap. Especially if the gap is less than 20 handle, you don't need to separate them by the quadrant. Okay, that 25%, 75%. Simply you will just observe the quadrant level. You don't need to expect the precision over there. You just don't need it. But if the gap is really much bigger, you should mark that quadrant and you should keep that over there so that you can have an idea how market is actually trading in that specific area. This is why I just use that quadrant for this gap and that gap, and I didn't just use that quadrant for these two gap because these two gap is really small. Okay, now today we had a high impact news around 8:30. Okay, so this is the 8:30 candle. We had a high impact news around 8:30, and if there is a news around 8:30, you always look for that 8:30 and you will focus around that 8:30. Before 8:30, so around 7 or 8, you will start to look for relatively equal highs and relatively equal lows. But around 8:30, you will start to look for new day opening gap or new week opening gap where market can reach for. If you have watched the episode 3, which I have actually summarized by the wizard version yesterday, then you already know how to think where market will go. For example, today market was over there around, before 8:30. We had a new day opening gap below here, and we had 1, 2, and the new week opening gap. All of them were above us. So simply you will think that market is going toward that new day opening gap, and then after trading any of this new day opening gap or maybe some kind of imbalance. So here I have an imbalance. I will talk about that little later. Okay, you will think that any of this area will be traded, then market can come back again to trade this new day opening gap, and this run will create around 8:30 as we have the news, red impact news around 8:30. Now just think, if you don't have the news around 8:30, what you are going to do? Are you not going to focus on 8:30 then? Absolutely not. You have to focus on 8:30 always. The reason is around 8:30 there is little bit volatility. Okay, not always, but most of the time you will get little volatility around 8:30. That's why the 8:30 is always important, and you should keep an eye around 8:30 to see what is going to happen. In the meantime, I would love to as I told at the beginning of this video, that I will summarize the advices, so I will just keep using some of them. If you have seen that episode 1, episode 2, and episode 3, all of those episode is actually for those who are here to learn the price action. That means you are not interested to push your button. Instead, you are here to observe the price action. What is happening? I'm just doing the journal. So I focused on journal on those 3 episodes. I told that you always do the journal. How many candles it takes to reach from there to there, write it down and take the screenshot. So you have to take the journal. And by taking the journal, by doing the journal, you will actually observe the price. You are not here push your button. You are here to observe the price action as you are the beginner. If you can do that, after keep doing that, you will get bored. One time, after a certain period of time, you will be so boring. So bored because you are seeing the same thing again, and again. Trust me, that is the part, or that is the time when you will start to earn real money. Because when you will get bored by doing same thing again, and again, and you put your real money in that boring stuff, you will earn money by being by getting bored, man. It's so simple. So this is all about episode 1, 2, and 3, and that is, you are not here to push your button, you are here to observe the price action. Now I would love to talk about this imbalance when around 8:30, if you see there is some kind of perfect fair value gap. Okay, around that area there is some kind of perfect fair value gap around that area, and you saw that before 8:30 market came there to that specific fair value gap, not that inversion fair value gap. Okay, that was the inversion fair value gap over there. I'm sorry, not this one, this is the inversion fair value. So when market actually came here and it traded that inversion fair value, don't focus to that inversion fair value gap. Instead, focus over here if there is some kind of perfect fair value gap. And you saw that market actually came here, tap to this fair value gap. You will simply expect that market will expand higher by using 8:30 news. Why? Because you have the new day opening gap over there, then you have the new week opening gap here. Simply, you can expect that market will reach at least until that area. Are you going to push your button? No, you are not going to do that. You are just observing. You are taking notes. You are journaling. Now, when market went through this new day opening gap, how far it can reach? See this gap over there? This is the gap. I would love to mark that gap over there. It can reach until that gap. Why it can reach until that gap? What is the importance of this gap? Now, you can see after this big run, so from there to there, market was falling until that area. Where did it came exactly? To this imbalance. Okay, there is some kind of imbalance. Now this is a big imbalance. I used the quadrant as well, and you can see that it has traded the upper quadrant. Is that random? Absolutely not. It has traded that upper quadrant tick by tick. After trading that imbalance, market went higher. Where did it go? To the consequent encroachment of that new day opening gap. Is it random? No. Then market fall. It tried to fall until that area. Now it missed that new day opening gap. That is telling me that later market can come back again to trade that new day opening gap. As a hindsight, you can see market actually went too far until that area. It went until that area. So you already know that market is not going to trade that new day opening gap. But when price was there, we didn't know that market is going to trade that today or not. It doesn't need to trade that new day opening gap today. It can expand higher to trade that new week opening gap again today. It can do that. How long you are going to keep that new week opening gap? 5 weeks. But brother, it has been traded over here, there. How it has been traded? Let's see, okay? How it has been traded. Random level, right? Random level, lower quadrant. Trade, random level, upper quadrant. Come back again, lower quadrant, consequent encroachment, little chit chat, okay, little chit chat, tried to break the new week opening gap, failed, boom. Where did it close? Below this new week opening gap. Tap again to the low and then look at the fall. How far it came? Exactly to the consequent encroachment to that specific new day opening gap in Monday. exactly tapped to that area, went higher, trade that imbalance, went through this area. See this nude opening gap, it went through that area, reached until this Monday, the Tuesday nude opening gap low. Look how beautifully the body is respected. Then went higher, right? It went higher. How far it reached? Some random level to that specific nude opening gap low. It tapped over there, bodies respected that nude opening gap. See, nobody has closed above this parallel gap. Above this nude opening gap. Weak did the damage. It reached until this certain level, as well as there was some imbalance. Mark that imbalance and use that quadrant, and you will see you will get some kind of precision over there as well. Okay. Then market fall again, reached until that random level, upper quadrant, went higher, come back, consequent encroachment, failed, then tap, it went higher. When it is going higher, you should simply think that it can reach until this imbalance. If it can go through this nude opening gap, if it can go through that nude opening gap, what should you look for? That imbalance. Why? To that fall, when market is falling, simply you know that you have lot of uh, cluster or the new week opening gap, nude opening gap, nude opening gap above you. So simply you will think that market will go toward that nude opening gap at first, then it will fall. So you are expecting that market will go higher. If it is expecting, you are expecting that market will go higher, you should mark the range, the high to that low. This is the range, this is the discount, this is the premium. Again, this is the discount, this is the premium. Where is this parallel gap? Just above that equilibrium, above the 50%. This is the first parallel gap. So when it will be there, what does it mean? That means it's in premium zone now. It's now in premium zone. That means after trading that parallel gap, it can fall for that new day opening gap, especially for that new day opening gap from that premium parallel gap. At the same time, I'm just going to remove this equilibrium or premium discount array. Instead of that, I would love to show you this breaker block over there. High, low, higher high. This high has taken all of this buy side liquidity. This is your lowest down close body close candle, which is your breaker block. So where is this parallel gap situated? Inside that breaker block. Now, what ICT told about the breaker block, if you has taken the notes from the wizard version as well, you already know what I have told over there. Above this breaker block, you have this bullish parallel gap. So when market went higher and then come back again to that specific bullish parallel gap, just let me mark that bullish parallel gap around that area. When it will come over here to that specific candle, it tapped to this bullish parallel gap. What you are going to think? Market is going higher? No, absolutely not, because market has done the damage over there already. So all the buy side liquidity has taken over there. It tried to break that new week opening gap, failed. The high of this new week opening gap stopped with the price, send it back. So what it is going to do? It is going through that parallel gap and it is going to work as an inversion parallel gap. So mark it on your right. So when market will be here inside this breaker block, still you should think that if market is overzealous, it can reach until that inversion parallel gap. Okay, you should think like that. After that news released, then market went where? To that parallel gap. Then exactly from where? Consequent encroachment. Let me show it to you actually. It tapped to this consequent encroachment, then fall. This is the retracement. How far market has been retraced to the consequent encroachment of that new opening gap. Is that random, brother? Absolutely not. This is a 50%. This is algorithmic price run. Price is algorithmic. If you believe it or not, market always follow the algorithm. Now, there is a lot of algorithm, but as ICT has introduced us 10:50, the 10 minute before the top of the hour, like 10:50 to 10:10, 11:10, 9:50 to 10:10, 12:50, 1:10, then what can I say, 2:50, 3:10, they're the macro. So over there, we are going to get most precise algorithmic price run into that macro time. Okay? This is another topics, but that macro time will prove that it is algorithmic. Now, ICT didn't teach us every single thing, Okay, he is not bound to teach us everything, but whatever he has already taught us or already taught us, we already know that by the macro time, we already know that this price is algorithmic, and algorithm always refer to certain level. What is that certain level? Consonant crossment, upper quadrant, lower quadrant, high, low, or a certain or very specific gap. What is that gap? New day opening gap. 4:59 p.m. closing and 6 p.m. opening to that same day. Okay, so market came here, tapped to this concurrent crossment, it went higher. Now, when it reached until this parabolic gap, what is that? The inversion parabolic gap. Where are you? Where were you? You are here, right? Then market went higher and it came here, come back again, tapped to this concurrent crossment, went higher. How far? Until that inversion parabolic gap. You are done for the day. What happened after this? You don't care because you are going to come back tomorrow again. This is not the one day where you are going to trade and this is for forever. No, man. You will have the opportunity to trade tomorrow as well. What you are going to do around that area? No, you are not going to trade. You are just going to journal. You are going to observe the price action. You are going to uh, you are going to read everything. You are going to write everything. Whatever you see, whenever you think that now market is going higher or lower, you will write it down everything and you will do the journal. Now I would love to go to one minute chart now. Okay, so here I need to talk about the 1 minute chart because it is important. Okay, so this is the 1 minute chart. Here I would love to explain the price action around that area. When market, this is the news candle around 8:30. Okay, that was a high impact news, so that was the news candle. Then market went through this new day opening gap, came back again where to the low of this new day opening gap, went higher again, come back again to the constant crossment, went higher again. Then for the last time it came here. What do I have? A very nice volume imbalance. Can you see it? This is a very nice volume imbalance. It has traded this volume balance. What is that? That is your order block. The opening is the level where market refer to trade. The opening of that down close candle, because it has traded this volume balance at the same time the constant encroachment. Then market went through this down close body close candle. This is going to refer as a order block. When market will tap to this order block, simply algorithm will send the price where it will send until this parabolic gap. What is that parabolic gap? Remember the parabolic gap above the equilibrium in the premium. This is that parabolic gap. Where did it reach? Exactly the constant encroachment. Where market is reaching, working the lower portion. First it reached until that area, then it came back again to the low. Look, it came back again to the low. It failed to go until that constant encroachment one more time. Then it breaks lower. Look at this break. How beautifully it has been broken. When it has been broken over there, if you go to your 15-second chart where ICT actually showed us the entry from 15-second chart, I'm just not going to explain that 15-second chart entry. There was a market structure shift, fair value gap, price trade that fair value gap, and there was a volume balance as well. Price trade that volume balance, then it fall. How beautifully it fall. Where did it came exactly? To that constant encroachment of that specific new day opening gap. After trading that new day opening gap, it was going higher. So this is the price action where you should anticipate where market is reaching for. Around 8:30, you will always look for new day opening gap or the new week opening gap. Before 8:30, around 7 a.m., you will look for relatively equal highs or relatively equal lows. But around 8:30, you will only focus on new day opening gap, new week opening gap, where market can reach for. You have to know the direction. This is this is all about this this episode 4. In short, I have tried to explain every single thing. So if I do the summary, if I make the summary, I would love to tell like this way. Around 8:30, you will always focus the price action, even if there is a news or there is no news. If there is a news, then you will think that where is your new day opening gap or new week opening gap, which way market can go for. if you think that market is going for that upper new day opening gap or new week opening gap, then you will look for some kind of fair value gap over there. Before 8:30, market will tap to that fair value gap, then boom, it will go toward that direction. That means new day opening gap or new week opening gap if there is a news. If there is no news, you will just observe the price. Are you going to participate in this price action? Absolutely not. You are not going to participate in that price action. Why? Because this price action you are going to observe. You are going to take the journal. Yeah, I mean doing the journal, and you are going to take a lot of notes. How many candles does it take to reach over there, or how many candles does it take to came here when it has done. All of this journal you have to write it down in the empty spaces of your chart. Take a screenshot, gather them. This is how you will build your confidence to think that no, this is algorithmic and price is algorithmic. Okay, so for example, this candle reached until that area, then the very next candle, where it did it tap. See, where did it tap? Just upper quadrant. Is that, I mean, random? No, it's algorithmic. Now, this area is balanced. So from this low to that high, when candle went through that high, this range is balanced. Next time when market came here, where did it came? To that imbalanced area. Look, this imbalanced area below this candle low, above that candle high. This is the imbalance. It came exactly to that imbalance. It didn't reverse from there around that area, because this is balanced already. Market doesn't need to trade that area one more time. But below this balanced price range, it has an imbalanced price over there. So market came here to trade that area. Algorithm set the price to trade that imbalance. After trading that, perfectly market closed above this new opening gap, and then finally when it has reached to that inversion fair value from 15-minute chart, if you remember, then you are done for that day. You don't need to predict what is going to happen next or something. No, nothing. And all of this, the time you were just journaling. So that was all about episode 4. This was the understanding of Wizard. Wizard has understood. This is his understanding. Okay, I just explained my understanding of episode 4. If you think it is insightful and you got some point what you should look for, now you are not going to get the clear idea from these videos, because the mentorship has just started. Slowly it is going to be clear. So you will just take the important notes from there, the way I take the notes and explain to you guys. So you will just take the important notes and you will do the journal. So until the next video, cheers.